The global economy in 2025 presents a mixed bag of opportunities and challenges. As we navigate through this complex landscape, various factors come into play, influencing the financial decisions of individuals and institutions alike. From technological advancements to geopolitical tensions, the economic environment is in a constant state of flux. Inflation continues to be a concern for individuals and businesses alike. The rising cost of goods and services erodes purchasing power, making it harder for people to maintain their standard of living. Businesses, on the other hand, face increased production costs, which can lead to higher prices for consumers. This cycle of inflation can create a sense of uncertainty and anxiety among the populace. Market volatility adds another layer of complexity, making it difficult to predict future trends with certainty. The stock market's unpredictable nature can lead to significant gains or losses in a short period, affecting the financial well-being of investors. This unpredictability often drives people to seek more stable investment options. Furthermore, rising global debt levels raise concerns about the long-term stability of the financial system. High levels of debt can lead to financial crises as countries struggle to meet their obligations. This instability can have far-reaching effects, impacting everything from interest rates to global trade. In these uncertain times, many investors turn to gold as a potential safe haven for their wealth. Gold's enduring value and stability make it an attractive option for those looking to protect their assets. Unlike stocks or bonds, gold is not subject to the same market fluctuations, providing a sense of security in turbulent times. Throughout history, gold has been revered for its beauty, rarity, and durability. Ancient civilizations used gold to create stunning artifacts and jewelry, symbolizing wealth and power. Its unique properties have made it a sought-after material for thousands of years, transcending cultures and eras. Unlike paper currencies, gold is a tangible asset with intrinsic value. It is not dependent on any government or financial institution, making it a reliable store of value. This independence from external influences adds to its appeal as a long-term investment. It cannot be printed at will by governments or devalued by inflation. This characteristic sets gold apart from fiat currencies, which can lose value due to excessive printing and inflationary pressures. Gold's limited supply ensures that it retains its value over time. This inherent stability has made gold a sought-after investment for centuries, particularly during times of economic uncertainty. Investors often flock to gold during financial downturns, viewing it as a safe harbor in a stormy sea. Its ability to preserve wealth and provide a hedge against inflation makes it a timeless asset in any investment portfolio. Investors are drawn to gold for several reasons. Primarily, gold is seen as a hedge against inflation. When the cost of goods and services rises, the purchasing power of paper money erodes. Gold, on the other hand, tends to retain its value over time, acting as a store of wealth. Moreover, gold is considered a safe haven asset. During periods of geopolitical instability, economic downturns, or financial crises, investors often flock to gold as a safe place to park their money. This flight to safety can drive up the price of gold, making it an attractive investment during turbulent times. Gold has a long and storied history as a form of currency and investment. From the earliest civilizations, gold has been a symbol of wealth and power. Its unique properties, such as its luster and malleability, made it an ideal medium for trade and ornamentation. Ancient Egyptians, for instance, adorned their pharaohs with gold jewelry and artifacts, believing it to be the flesh of the gods. For centuries, civilizations around the world have valued gold for its beauty and rarity. The Greeks and Romans used gold extensively in their coinage systems, and it was a key component of their economies. Gold mining techniques evolved over time, from simple panning methods to more sophisticated mining operations, reflecting the growing importance of this precious metal. Using it to mint coins, create jewelry, and amass wealth, gold became a cornerstone of trade and commerce. The Silk Road, a network of trade routes connecting the East and West, saw gold being exchanged for spices, silk, and other valuable goods. This trade not only facilitated economic growth, but also cultural exchanges between distant civilizations. The gold standard, a monetary system in which a country's currency or paper money has a value directly linked to gold, was prevalent throughout much of history and played a significant role in international finance. countries adhered to the gold standard to ensure stability and trust in their currencies. This system required nations to hold substantial gold reserves, influencing global economic policies and international trade. While the gold standard has been largely abandoned in modern times, gold continues to be viewed as a reliable store of value and a hedge against economic uncertainty. In times of financial crisis, investors flock to gold, driving up its price. The 2008 financial crisis, for example, saw a significant surge in gold prices as people sought refuge from the collapsing stock markets. Investors today often turn to gold during times of market volatility or geopolitical turmoil. Gold's enduring appeal lies in its ability to retain value even when other assets falter. Events such as wars, political instability, and economic recessions often lead to increased demand for gold as it is perceived as a safe haven. Seeking to preserve their capital and protect themselves from potential losses in other asset classes, investors analyze market trends and geopolitical events to make informed decisions about gold investments. Financial advisors often recommend a diversified portfolio that includes gold to mitigate risks and ensure long-term financial stability. As history has shown, gold remains a timeless asset, valued across cultures and eras for its enduring worth. Investing in gold, like any investment, comes with its own set of advantages and disadvantages. One of the main advantages of gold is its ability to preserve wealth over long periods. Unlike paper currencies, which can be devalued by inflation or government manipulation, gold has maintained its value for centuries. This makes it an attractive option for investors seeking to protect their purchasing power over the long term. However, gold also has its drawbacks. Unlike stocks, bonds, or real estate, gold does not generate passive income. Investors who hold physical gold will not receive interest payments or dividends. Additionally, storing physical gold can be costly and inconvenient. Investors need to consider the costs of insurance, secure storage facilities, and potential theft. Section 5. Navigating the 2025 landscape. The year 2025 has seen a continuation of many of the economic trends that have been driving gold prices in recent years. Gold has always been considered a safe haven asset, and its performance in recent years has only solidified this status. Investors have been closely monitoring the market, looking for signs that could indicate future movements in gold prices. The historical trends show a steady increase, reflecting the growing demand for this precious metal. Inflation, while moderating somewhat, remains a concern for many investors. The cost of goods and services has been rising, albeit at a slower pace than in previous years. This persistent inflationary pressure has led investors to seek assets that can preserve their purchasing power. Gold, with its historical reputation as a hedge against inflation, continues to attract attention. Financial analysts are keeping a close eye on inflation trends, as any significant changes could impact investment strategies. Interest rates are still relatively low, making it less attractive to hold cash or bonds. Low interest rates mean that the returns on traditional savings accounts and bonds are minimal, pushing investors to look for alternative assets. Gold, with its potential for higher returns, becomes an appealing option. The uncertainty in the bond market, coupled with the low yields, has led many to diversify their portfolios by including gold. Geopolitical tensions persist in various parts of the world, adding to market uncertainty. Conflicts and political instability in key regions can have a ripple effect on global markets. Investors often turn to gold during such times of uncertainty, as it is seen as a stable and reliable store of value. The ongoing geopolitical issues have only reinforced the importance of having a diversified investment strategy that includes safe haven assets, like gold. Central banks around the world continue to add to their gold reserves, signaling their confidence in the precious metal as a safe haven asset. This trend is a clear indication of the strategic importance of gold in national reserves. By increasing their gold holdings, central banks aim to protect their economies from potential financial crises. The actions of these institutions often influence market sentiment, encouraging individual investors to follow suit. Furthermore, the emergence of digital gold platforms has made it easier than ever for investors to gain exposure to gold without having to deal with the hassle of storing physical bullion. These platforms offer a convenient and secure way to invest in gold, allowing for quick transactions and easy access to market information. The rise of digital gold trading has democratized access to this valuable asset, making it accessible to a broader range of investors. As technology continues to evolve, we can expect even more innovative solutions in the gold investment space. Section 6. Is gold right for you? Deciding whether to invest in gold is a personal decision that depends on individual circumstances, risk tolerance, and investment goals. Gold can be a suitable investment for certain types of investors. For example, conservative investors who prioritize capital preservation and are looking for a hedge against inflation may find gold to be an attractive addition to their portfolios. However, it's important to remember that gold is not a get-rich-quick scheme. It is a long-term investment that should be viewed as a small part of a well-diversified portfolio. Investors seeking aggressive growth or short-term gains may want to look elsewhere. Section 7. Making informed investment decisions. Before making any investment decisions, it's crucial to conduct thorough research, understand the risks involved, and consider your own financial situation and goals. Consider consulting with a qualified financial advisor who can provide personalized guidance based on your specific circumstances. A financial advisor can help you determine the appropriate asset allocation for your portfolio, assess your risk tolerance, and guide you toward investments that align with your financial objectives. They can also provide valuable insights into market trends, economic indicators, and other factors that may influence your investment decisions. Section 8. The future of gold. The future of gold, like any investment, is uncertain. However, the factors that have driven demand for gold in the past, such as economic uncertainty, geopolitical risks, and inflationary pressures, are likely to persist in some form or another. As long as these factors remain in play, gold is likely to retain its allure as a safe haven asset and a store of value. The emergence of digital gold platforms and the increasing accessibility of gold investment products are also likely to shape the future of the gold market. These innovations are making it easier than ever for investors to buy, sell, and hold gold, potentially broadening its appeal to a wider range of investors. Section 9. Join the conversation. What are your thoughts on gold as an investment in today's economic climate? Share your views and engage in the discussion below.